Victoria, what a wild ride it's been. Is there anything that's happened over the past several days that makes you think that this is over and that we are now getting ready to make a bigger bounce in the overall markets?
Dom, I don't think this is over by any stretch of the imagination, and we actually anticipate quite a bit more volatility going forward. Perhaps not to the same magnitude that we have seen, as you just mentioned, all of the 1,000-point moves that we have seen in a day. I'm not sure we get that, but I mean, look at the futures this morning, down 500 already. Some of that probably just a pullback from the large gain we saw yesterday. But I mean, the coronavirus is still such a big uncertainty. The unknowns associated with it are there. That's going to continue to drive volatility. I think we're going to see more volatility even from Boeing, which a lot of people have forgotten that story, but that's still going to be something that affects our fundamentals going forward. Obviously, the election issues are there. So I think there's still a lot of issues that can cause the volatility in the markets, and we still have a ways to go with that.
Is it an opportunity, Victoria, for investors and traders out there? That volatility often creates those opportunities. Are you finding any yourself, and where exactly are you going for those particular trades?
Sure. The last thing we want, Dom, is for, whether we do it or our clients, we don't want them chasing the market. That's never going to end in a good position for the client. So what you need to do is be more strategic, look for opportunities. We have done that. We're not in there every day making trades, but we've come out of some names. We actually sold our Take-Two Interactive name that we had in our portfolio, and we went into a more utility power name, Vestra Energy. So find opportunities that you can go into of names maybe you've been watching and you've been waiting for the price to come down a little bit. This could be your entry point, but I don't think you want to go all in for the sheer fact of what we just mentioned. There's going to be a lot more volatility going forward.
Is it worrisome to you seeing something like the 10-year benchmark U.S. Treasury note yield at 1% or below? What does that signal to you about what's happening overall with the global market?
It really signals this panic mode that I think a lot of people have been in, this flight to quality that we're seeing. With the emergency cut that we had from the Fed, you would have anticipated that that would have supported the market a little bit, but there we went down below 1%. I think we were down to about 0.94 on the 10-year Treasury over the last couple days. I do feel like this is an over-exaggeration. I anticipate we'll see yields start to move a little bit higher as we hear more central banks come out and start to support the results and the actions from the coronavirus. We've got the Fed that has their meeting March 17th and 18th, but then you also have the Bank of Japan. We have the Bank of England. We anticipate the ECB is going to come out and make a statement. So I think there's a lot more that could be coming from central banks. The Fed was the first one to do it, and that can put maybe a floor on some of the panic that we're seeing, but I'm not sure it's going to do much going forward. I think we're going to have to get through the coronavirus before rates move higher.
Just a few seconds left here. What has you the most optimistic about the markets, whether it's the economic data in certain parts of the market dynamic? What has you saying, hey, there could be green shoots out there?
Dom, before the coronavirus, the fundamentals were actually doing pretty well. We looked at ISMs both domestically and globally, and those had started to trough and they were coming back. Historically, you get about a 6 to 8% recovery in equities following the trough in ISM. So we think once we get through the virus, some of that will come back and we'll start to see the markets trend a little bit higher.